Hey, it's Nolan Mathias from Mortgage 360, and today we're going to talk about how the coronavirus is affecting interest rates and what you should do if you have a mortgage or you're getting a mortgage. But first, do me that favor, hit the like button, hit the subscribe button, and if you're in the industry, I highly recommend that you hit that notification bell so you get the industry's most honest and transparent information first. Okay, so what's up with the coronavirus and interest rates? Well, if you've been watching the news, you saw today that the markets got absolutely pummeled. The Dow Jones is down about 3.5%, so is the S&P 500, and world markets got absolutely killed. All because the world's second largest economy ground to a halt. That's right, China, the world's second largest economy and basically the biggest exporter in the world, is ground to a halt because of 74,000 cases of the coronavirus. And over the weekend, we saw international cases go through the roof. All of these cases of coronavirus in China are having a devastating effect on that economy. It's insanity. I mean, we've all heard the stories so far of cities that are basically shut down. And when cities shut down, so does production. And when production shuts down, the economy shuts down. And when the economy shuts down, well, people get worried. And what's making this even worse is that over the weekend, international cases of the coronavirus went up as well. Both Iran and Italy are reporting outbreaks in their countries. So these new reports over the weekend have incited new fears of an economic global slowdown, which is what led to international markets plunging today. In fact, for the Dow Jones, all of the gains made in 2020 have essentially vanished in one day. Could you imagine if you had started going to the gym on January 1st and everything was going amazingly well, and then all of a sudden February 24th rolls around and all your gains disappeared and you were back to that, New Year's Eve body that you had started with? Well, that's what happened to the economy today. All that muscle, all that energy that had been building up throughout the beginning of the year, gone. In fact, it was the worst day in 2 years in the stock market. See, what happens is when you have uncertainty in the economy, investors leave stocks and move to more certain forms of investments, things like bonds. And what happens is when you have more demand for bonds, you end up with higher prices and therefore lower yields. The higher the price of the bond, the lower the percentage yield that you get in return. And mortgages and bonds are tied together very closely when it comes to pricing. In fact, almost all fixed rates are based off bond market rates. Basically, if you have a 5-year mortgage, that mortgage was priced off the 5-year bond rates. Let's say a 5-year bond rate is 1.3% and you have a mortgage of 2.7%. The lender is basically making a 1.4% spread. And when those 5-year bond yields come down, so does the pricing for a 5-year mortgage. And we've been seeing this over the last couple of weeks. Slowly but surely, 5-year mortgage pricing is coming down. And today, with a big drop in the 5-year bond yields, you can expect that 5-year fixed mortgage rates are going to come down even further. And this is before the Bank of Canada even gets involved. Right now, Bloomberg's Rate Probability Index is expecting that the Bank of Canada is going to have to lower their interest rates at least once in the coming year. That's great news for variable rate holders, and anybody who's got a line of credit for that matter. So what's the play right now in the mortgage world then? We know that selling your stocks is kind of what's been happening today and people have been buying bonds, but what do you do if you have a mortgage? Well, first of all, if you're in the process of buying a house, interest rates really shouldn't factor into your buying decision. But know that over the next couple of weeks, next couple of months, interest rates are probably going to get lower and you can take advantage of that. If you're already in the process of buying a house and you've got a closing date, what you should be doing is reaching out to your bank or broker and saying, hey, I want to make sure that I get the best rate possible, and I want to make sure that it's the lowest rate between now and when I close. Many banks and many brokers won't ask for your rate to be changed once you've already written the contract, so make sure that this is something that they do and something that you ask for. Best time to ask for this? 5 to 10 days prior to closing. If you've already been approved and got a rate hold in place, maybe go back and ask your bank or broker to refresh your rate hold as you see interest rates go down. And what about if you already have a mortgage? Let's say you've already got a variable rate mortgage. Well, I think right now, wait and see might be the best approach. We know that fixed rates are going to go down. We know that variable rates are likely going to go down. And if you believe the Bloomberg Rate Probability Index, there's a pretty good chance the Bank of Canada is going to lower rates anyways, which means if you hold a variable rate mortgage, your rate's going to get better as well. Now, you could lock in, but if you lock in too soon, there's a good chance that you'll miss out on lower rates that may be coming in the future. We don't know how this whole thing's going to play out and what the next 3, 6, 9 months hold. And if you've already got a fixed rate, well, if it's over 3%, I think you should definitely be reaching out to a broker or your banker and seeing if there's anything you can do to get the rate lowered. The US media is already talking about the fact that lower rates have sparked a refinance boom already in the US, and I expect that the same is going to follow in Canada. Especially if you got a mortgage, late 2018 to early 2019. So what does the coronavirus really mean for interest rates? Well, what it means is that if you've already got a mortgage or you're in the process of getting one, there's a pretty good chance that you can take advantage of the current economic circumstances. Whether it's getting a super low rate for the next 5 to 10 years, or whether it's redoing an existing mortgage that you already have, the opportunity is there. And if you need somebody to help you with that, feel free to reach out. We're always happy to help. So hey, if you found this information valuable, hit the like button. If you like honest and transparent mortgage information, hit the subscribe button. And if you're in the industry, whether you're a realtor, a lawyer, a mortgage broker, a lender, an appraiser, whatever you are, hit that notification bell so you're one of the first to get this info straight to your inbox.